I think the numbers that have been reported are OpenAI is supposed to lose something like 120 billion between now and 2028, 29, where you're going to become profitable. IPO next year?
I don't know.
Do you want to be a public company? Sam, welcome to the show.
Thanks for having me.
So OpenAI is 10 years old.
It's crazy to me.
ChatGPT is 3. But the competition is intensifying. This place, we're at OpenAI headquarters, was in a code red, is in a code red after Gemini 3 came out. And everywhere you look, there are companies that are trying to take a little bit of OpenAI's advantage. And for the first time I can remember, it doesn't seem like this company has a clear lead. So I'm curious to hear your perspective on how OpenAI will emerge from this moment and win.
First of all, on the code red point, we view those as like relatively low stakes, somewhat frequent things to do. I think that it's good to be paranoid and act quickly when a potential competitive threat emerges. This happened to us in the past. That happened earlier this year with DeepSeek. And
there was a code red back then too.
Yeah. There's a saying about pandemics, which is something like when a pandemic starts, every bit of action you take at the beginning is worth much more than action you take later. And most people don't do enough early on and then panic later. And we certainly saw that during the COVID pandemic. But I sort of think of that philosophy as how we respond to competitive threats. And, you know, I think it's good to be a little paranoid. Gemini 3 has not, or at least has not so far, had the impact we were worried it might. But it did, in the same way that DeepSeek did, identify some weaknesses in our product offering and strategy. And we're addressing those very quickly. I don't think we'll be in this code red that much longer. Historically, these have been kind of like 6 or 8 week things for us. But I'm glad we're doing it. Just today, we launched a new image gen model, which is a great thing, and that's something consumers really wanted. Last week, we launched 5.2, which is going over extremely well and growing very quickly. We'll have a few other things to launch, and then we'll also have some continuous improvements like speeding up the service. But, you know, I think this is like, my guess is we'll be doing these once, maybe twice a year for a long time. And that's part of really just making sure that we win in our space. A lot of other companies will do great too, and I'm happy for them. But, you know, ChatGPT is still by far the dominant chatbot in the market, and I expect that lead to increase, not decrease over time.
Okay, so we're going to move to infrastructure in a minute, but before we leave this section on models and capabilities, when's GPT-6 coming?
I expect, I don't know when we'll call a model GPT-6, but I would expect new models that are significant gains from 5.2 in the first quarter of next year.
What does significant gains mean?
I don't have like an eval score in mind for you yet, but
okay. More enterprise side of things, or
definitely both. There will be a lot of improvements to the model for consumers. The main thing consumers want right now is not more IQ. Enterprises still do want more IQ, so we'll improve the model in different ways for different uses. But our goal is a model that everybody likes much better.
So infrastructure, you have 1.4 trillion thereabouts in commitments to build infrastructure. I've listened to a lot of what you've said about infrastructure. Here are some of the things you said. If people knew what we could do with compute, they would want way, way more. You said the gap between what we could offer today versus 10x compute and 100x compute is substantial. What can you help flesh that out a little bit? What are you going to do with so much more compute?
Well, I mentioned this earlier a little bit. The thing I'm personally most excited about is to use AI and lots of compute to discover new science. I am a believer that scientific discovery is the high order bit of how the world gets better for everybody. And if we can throw huge amounts of compute at scientific problems and discover new knowledge, which the tiniest bit is starting to happen now. It's very early. These are very small things. But, you know, my learning in the history of this field is once the squiggles start and it lifts off the x-axis a little bit, we know how to make that better and better. But that takes huge amounts of compute to do. So that's one area. I hope we're like throwing lots of AI at discovering new science, curing disease, lots of other things. A kind of recent cool example here is we built the Sora Android app using Codex. And they did it in like less than a month. They used a huge amount. One of the nice things about working at OpenAI is you don't get any limits on Codex. They used a huge amount of tokens, but they were able to do what would normally have taken a lot of people much longer. And Codex kind of mostly did it for us. And you can imagine that going much further, where entire companies can build their products using lots of compute. People have talked a lot about how video models are going to point towards these real-time generated user interfaces. That will take a lot of compute.
Okay, let's talk about numbers since you brought it up. Revenue is growing, compute spend is growing, but compute spend still outpaces revenue growth. I think the numbers that have been reported are OpenAI is supposed to lose something like 120 billion between now and 2028, 29, where you're going to become profitable. So talk a little bit about like how does that change? Where does the turn happen?
I mean, as revenue grows and as inference becomes a larger and larger part of the fleet, it eventually subsumes the training expense. So that's the plan. Spend a lot of money training, but make more and more. If we weren't continuing to grow our training costs by so much, we would be profitable way, way earlier. But the bet we're making is to invest very aggressively in training these big models.
The whole world is wondering how your revenue will line up with the spend. The question's been asked if the trajectory is to hit $20 billion in revenue this year, and the spend commitment is $1.4 trillion. So I think it would be great just to
over
lay
a
out,
very long period of time.
And that's why I wanted to bring it up to you. I think it would be great to just lay it out for everyone once and for all how those numbers are going to work.
It's very hard to like really. I find that one thing, I certainly can't do it, and very few people I've ever met can do it. You know, you have good intuition for a lot of mathematical things in your head, but exponential growth is usually very hard for people to do a good, quick mental framework on. Like, for whatever reason, there were a lot of things that evolution needed us to be able to do well with math in our heads. Modeling exponential growth doesn't seem to be one of them. So the thing we believe is that we can stay on a very steep growth curve of revenue for quite a while. And everything we see right now continues to indicate that. We cannot do it if we don't have the compute. Again, we're so compute constrained, and it hits the revenue line so hard that I think if we get to a point where we have like a lot of compute sitting around that we can't monetize on a profitable per unit of compute basis, be very reasonable to say, okay, this is like a little, how's this all going to work? But we've penciled this out a bunch of ways. We will, of course, also get more efficient on like a flops per dollar basis as, all of the work we've been doing to make compute cheaper comes to pass. But we see this consumer growth, we see this enterprise growth. There's a whole bunch of new kinds of businesses that we haven't even launched yet, but will. But compute is really the lifeblood that enables all of this. So we, there's like checkpoints along the way. And if we're a little bit wrong about our timing or math, we have some flexibility. But we have always been in a compute deficit. It has always constrained what we're able to do. I unfortunately think that will always be the case, but I wish it were less the case, and I'd like to get it to be less of the case over time, because I think there's so many great products and services that we can deliver, and it'll be a great business.
Okay, so it's effectively training costs go down.
As a percentage. They go up massively overall, but yeah.
And then your expectation is through things like this enterprise push, through things like people being willing to pay for ChatGPT, through the API, OpenAI will be able to grow revenue enough to pay for it with revenue.
Yeah, that is the plan.
Now, I think so the market's been kind of losing its mind over this recently. I think the thing that has spooked the market has been the debt has entered into this equation. And the idea around debt is you take debt out when there's something that's predictable. Yeah. And then companies will take the debt out, they'll build, and they'll have predictable revenue. But this is a new category. It is unpredictable. Is that, how do you think about the fact that debt has entered the picture here?
So first of all, I think the market more lost its mind when earlier this year, we would like meet with some company and that company's stock would go up 20% or 15% the next day.
That was crazy.
That felt really unhealthy. I'm actually happy that there's like a little bit more skepticism and rationality in the market now, because it felt to me like we were just totally heading towards a very unstable bubble. And now I think people are some degree of discipline. So I actually think I think people went crazy earlier and now people are being more rational. On the debt front, I think we do we know that if we build infrastructure, we the industry, someone's going to get value out of it. And it's still totally early. I agree with you, but I don't think anyone's still questioning there's not going to be value from like AI infrastructure. And so I think it is reasonable for debt to enter this market. I think there will also be other kinds of financial instruments. I suspect we'll see some unreasonable ones as people really, innovate about how to finance this sort of stuff. But, like lending companies money to build data centers, that seems fine to me.
I think the fear is that if things don't continue at pace, like here's one scenario, and you'll probably disagree with this, but like the model progress saturates, then the infrastructure becomes worth less than the anticipated value was. And then, yes, those data centers will be worth something to someone, but it could be that they get liquidated and someone buys them at a discount.
Yeah, and I do suspect, by the way, there will be some like booms and busts along the way. These things are never a perfectly smooth line. First of all, it seems very clear to me, and this is like a thing I happily would bet the company on, that the models are going to get much, much better. We have like a pretty good window into this. We're very confident about that. Even if they did not, I think there's like a lot of inertia in the world. It takes a while to figure out how to adapt to things. The overhang of the economic value that I believe 5.2 represents relative to what the world has figured out how to get out of it so far is so huge that even if you froze the model at 5.2, how much more like value can you create and thus revenue can you drive? I bet a huge amount.
IPO next year?
I don't know.
Do you want to be a public company? You seem like you can operate private for a long time. Would you go before you needed to? In terms of funding.
There's like a whole bunch of things at play here. I do think it's cool that public markets get to participate in value creation. And, in some sense, we will be very late to go public if you look at any previous company. It's wonderful to be a private company. We need lots of capital. We're going to, cross all of the sort of shareholder limits and stuff at some point. So am I excited to be a public company CEO? 0%. Am I excited for OpenAI to be a public company? In some ways I am. And in some ways, I think it'll be really annoying.